Hello traders and welcome to a video on liquidation hunting in 2022. I haven't covered this topic in a while and I was exploring alternative ways for short-term trading, and of course this ranks among the top. So what you're looking at here is High Block Capital and the alpha version. And what we see here is on the bottom chart is liquidations. You can see that right there, with red being longs liquidated and green being shorts liquidated. Now what you can also see with all of the coloring on the chart is those are all predicted liquidation points from the past that have been hit and the present that we think are probably going to get hit, as you can see here. Now what you will probably also notice is that this has done a pretty good job at predicting where the major liquidations will be. So if you look here, when we go back in time, this predicted that there would be heavy liquidations around right below $40,000 right there. There'd be a lot of liquidations right there as well at around, what is that, 39.5. And this predicted it because it looked at volume and open interest from traders to see where traders would likely be liquidated on their present leverage. And you can see here that it did a pretty good job at really nailing where real liquidations actually did happen, such as right here. This is where a fair amount of liquidations had occurred, and you can see just how many predicted liquidations were around that area. So yes, this does work quite well, but what do we do when this kind of thing happens? Well, there's a ton of really good strategies you can do. One of my favorite ones is to take a short-term trade on an approach of a liquidation area. Basically what that is let's say, we're consolidating right here. I could long or I could short. Shorting here because what we see is I don't see any really liquidation potential above, but I see a bunch of liquidation potential below. So if you short here and then target to take profit after these hit, that can be a very effective strategy. Now you might say, well, how does this beat 50-50 chance? Why just short there? Well, typically there's something that can happen called cascading liquidations, and that's why price can just drop so quickly. One liquidation is hit, which drives another, which drives another, which drives another. What that means is that if you play the side that is likely to have cascading liquidations, that's more likely to propel price lower or higher, depending on where the liquidations are, rather than just, price rising. Basically what I'm saying is if price was to rise here, there might not be a lot of stop losses and liquidation points. But if price was to fall a little bit, as you can see it did here, it just rapidly falls a few percent. Meaning that if I have, 2% stop loss here and a 2% take profit here, or even not even a take profit because I'm waiting for the cascade, then it's more likely than not, I would say, for the liquidation, for our take profit near the liquidations to be hit, even though 2% might be a little too minimal. So that is one thing that you can do, and I found that this does tend to work pretty well in most market cycles. Another example was right here. Even after all of these liquidations have been hit, you can see that they were real right here in the millions per minute. Now what we can see is price was consolidating here, but we had all of these liquidation levels right here. Basically, we were indicated that a fair amount of traders would be liquidated if price went down to 38.8, and look at that wick. That wick happened, it hit all of these predicted liquidations, and it was actually a real liquidation on the exchange, as you can see. So this doesn't always work where, the predicted liquidations line up with who actually got liquidated, but I found that it works more often than not, especially in, scenarios like this. When you see a bunch of liquidation potential, a bunch of these bubbles right here next to each other, that's a very high liquidity zone. So if price does approach here, it's likely to liquidate a lot of people and propel price lower. You can see we did have a fair amount of liquidations here as price just went down there. What was that, like 2% in a minute? 1.5% in 1 minute, which is pretty extreme volatility for the most traded and most popular cryptocurrency of all time, which is BTC, Bitcoin. So if we look at more present data, let me see here. Oh, this one was a good one. Look at this. This was just to liquidate the 100x traders. Anyone who bought up here got immediately liquidated, and then price went right back up. That was unfortunate for them, but don't use 100x. And you can see here, yeah, right here is a pretty good example of it too. And then we're going to go to present. I'll show you guys what that looks like. So there was a lot of, predicted liquidations in this area. We can all see that, right? From 38.4 down to about 38.1. This is a high liquidity zone. As price was approaching, this would probably be not a terrible time to have taken a short, because if price does reach this, it's going to just erupt down like that, like a 1% very quick move. And it's kind of hard for to show just how violent these moves are because I'm kind of using a weird scale. But these are very, very rapid moves. It's, for an asset this large, a 1% move in a minute is pretty notable. And if you can be on the right side of that 1% move, then that can be pretty profitable. But as you can see here, we had a lot of liquidation potential, and actual liquidations did happen, as is customary. All right, so now looking at what is going on here. So one kind of cool thing that happened was each of these liquidations points have been hit and became reversals. Price went down to here, hit that, and then reversed, and then a liquidation point was right there, hit that, and then it reversed. Still, though, I think that my favorite strategy isn't opening trades where, like putting a limit buy order here, a limit buy order here, trying to open a long when people get liquidated, but rather to close out a short. That's more my kind of style, to use liquidation points as take profits and not as entry points. Why do I say that? If I was to say, this might be likely to hit and then we cascade, I don't really want to buy here, do I? Because if I buy here and enter and price just does that, then I'm, kind of screwed. But if I short, put a partial take profit here and then let the rest ride, that's a really good scenario. In both scenarios, I actually am buying, because to close my short, I'm buying, and to open long, I'm buying. But when I'm closing my short, it's just a much better situation in high volatility than something such as opening a long, which can be kind of troubling when you're doing it on high volatility in leverage markets. And finally, the final way that you could also use this, which would be probably the most safe, is to just use spot only. What I mean by that is just trading BTC USD, non-leverage, selling Bitcoin to try to buy Bitcoin at a lower price to gain more Bitcoin, buying Bitcoin and selling Bitcoin at a higher price to try to gain more USD. An example of that would be something like, you think the price is going to fall from when it hits 40 because you see these liquidation points. You sell here your spot holdings, and then, you get a little bit more BTC after it falls. Of course, your profits won't be as much because you're not leveraged, but there's virtually no risk. I mean, there's a lot of complicated arguments on, is there risk in spot? I mean, personally, I don't really think so, because if you sold, if you have $100,000 in Bitcoin, you sell it all here, and then price just kind of goes up a bit and then goes down, goes up, you're not technically losing capital or forced to do anything. You're losing potential profit, but you're not technically losing any money. You still have 100K because, you're not, you haven't bought Bitcoin. So that is one benefit of spot, that you losing money is a little bit different because you can kind of pick your entry points and be a lot pickier. So that's going to do it for this video. I unfortunately think that there's a lot of liquidation potential to the downside. I'm hoping we don't reach that, but what I will do is, if we approach these lows again, I think that, as crazy as it might sound, buying a put or entering a short and then having something like a short around here, if we get more pressure, and then stop loss such as right here before the liquidation price, and then just taking profit on this kind of move that could happen, just that kind of dump, I think that would probably be pretty good. But that is potential. Price could go up, but I think if it starts to climb down, it's going to be really dangerous because of all this potential liquidation, and you'll see a lot of liquidations here. So if you want to look at this kind of graph, I'm going to give you guys a link in the description below where you can look at potential liquidation points, and you can make your own analysis from there. Thank you for watching, and happy trading.